Yo, what's up guys? Nathan Robert here. In this video, I'm going to give you a total stock portfolio update. So we haven't done that in a while. So we have a lot of updates I want to share with you. We'll show you every stock that I own, how much I'm up and down on them. And I have multiple accounts as well. So we have my main taxable account. We also have a Roth IRA. I'm going to show you every stock in there, as well as my MooMoo account. So check this out. Just today on the right there, we're up 7% in this account just today. So I can't wait to share with you the news there in my MooMoo account. We have some stocks in there that are going nuts. So I can't wait to share with you that. As well as we're going to show you all of my dividend income. So actually here in my Robinhood account, every stock in here pays a dividend. So I'll show you my dividend history, how much income we're getting. Some of these stocks even pay monthly, like Realty Income right here. They're down 3% today, but they're my highest payer. They pay me every single month. But yeah, hope you guys like this kind of stuff. If you do, don't forget to drop a like on the video. This video might be a little longer because I really want to give you I want to give you my thoughts on each stock individually. So let's just get straight into the video. So I'll show you how my performance has been doing. You know, our goal of course is to beat the S&P 500, and right now we're doing that successfully. We're up 38% year to date, which is pretty cool. You know, just a high quality dividend stock. So I'll go ahead and share with you my Roth IRA. Since it's only $200, I mean, you know, it's very insignificant compared to my taxable account, but I'm slowly adding to this. I started it just a couple months ago, but anyway, I'll just be quick about this. Here are the three stocks I own in here. You've probably never heard of them. I got BRX. That one is a REIT, a real estate investment trust, like a 4% dividend yield. But anyway, that's our Roth IRA. So now I'm going to talk about each one of my stocks individually. So feel free to check out the timestamps down below and maybe skip over ones you don't want. But we're going to start with my biggest stocks first. We're going to go like top to bottom. And then after we go over my Robinhood portfolio, we're going to go into my MooMoo portfolio, and it just keeps on going up. So we're going to go over my MooMoo portfolio second. So I hope you guys like this longer form kind of content. Don't forget to drop a like on the video, and let's just get straight into it. So let me tell you why this company right here is my largest holding. You've probably never heard of it, but that's totally okay. And they're actually expected to have $40 of EPS by the year 2030. They gave that projection themselves. So if you do a 20 times multiple on that, that's a $800 stock price by the year 2030. So it's a bit of a long-term play, but point being, there's a lot of growth that this company is expected to have until the year 2030. They're expected to grow double digits. But here we go, or CAGR at double digits. But let's just look at their net income right here. They actually made, just in the past trailing 12 months, around $1 billion. So just around $1 billion. Even right now, they're trading at, I think, 20 times earnings. But check this out. Remember how they made $1 billion, you know, $200 million a quarter? Well, their dividend only cost $45 million. So their dividend literally is nothing, such a low payout ratio. On top of that, if we go down here to their stock buyback program, let me show you how much they're spending on buying back their own stock. So remember, the whole company was worth $21 billion. They spent so much money buying back their own stock that they actually bought back 7% of all the shares outstanding. So look at that. That's like a 7% non-cash dividend yield. And check this out. This company has a bunch of cash. Look at that. They have $1.5 billion of cash on hand right now. And check this out. Since they have $1.5 billion of cash, it's making them a bunch of interest. Well, they actually just started making interest for the first time ever. Look at that. They used to pay interest on their debt. Well, since they have so much cash now, they put it in the money market funds. They made $4 million of interest. But remember, they do have debt. So look, they have $1.5 billion in cash and total debt of $2.2 billion. They could easily pay off all the debt if they wanted to. And look at this diluted normalized EPS. Look at that, $5 of diluted earnings in the most recent quarter. It's on the left there. It's like reversed for some reason. But anyway, they made $5 of diluted EPS, you know, thanks to the share buybacks, and their dividend is $1 per share. This company is actually so close to a dividend king. They have 48 years of dividend growth. They actually just rose their dividend by 15%. Look at that, from 85 cents to $1. So you now to get $1 a quarter. Again, the yield isn't high. It's 0.88%. But that's why I really wanted to share with you why this one's my largest holding. I'll be really quick about this too. I want to show you the free cash flow yield this company is trading at right now. So if we just type in Carlisle here and look at this actual company's yield right here, the free cash flow yield of 4.71%, which is, you know, the free cash flow divided by the market cap. But then we also have the earnings yield, the net income of 6.89%. So this company, yeah, here's the dividend growth, you know, 48 years, dividend king, Payout ratios of 14%. As a dividend company, there's so much room for this stock to raise their dividend. On top of the share buybacks, remember they bought back 7% of the entire company just in the past year. So that's why Carlisle is my largest holding in my Robinhood account. So yeah, that's ticker symbol CSL. Oh yeah, here's my total percent change on every stock we own in here. So we're up on every stock except for my newest holding down here at the bottom. We'll get into that a little later. But here's now Salesforce stock, ticker symbol CRM. And this one has done phenomenal the past 3 months. It's actually kind of close to all-time highs now. We're up 30% on our Salesforce stock. And here's why Salesforce actually deserves to be where they are today. So Salesforce, if you don't know, they actually make more free cash flow than Coca-Cola. Oh, there we go. Sorry. So this company, and I own 2 more shares of this in my Webull account. But anyway, Salesforce makes more free cash flow than Coca-Cola, but if we look at their net income right here, look at this. They actually used to kind of, lose net income back here, but now look at this. They're very consistent, make, well over $1 billion every single quarter. But mainly we want to look at Salesforce for their free cash flow down here. And they, of course, make more free cash flow than Coca-Cola. They always get most of their money that one quarter. You see that? 2025 Q1, they're in fiscal year. But anyway, they made $6 billion that quarter, $6.25 billion. But I'll show you a little bit more about their financials. So check this out. They have $5 billion in short-term investments plus another in cash, $8 billion basically. So about $14-15 billion of cash, and they have total debt on hand of $8.4 billion. And look at that. They just paid off $1 billion worth of debt. You see, it went down exactly $1 billion in the most recent quarter. So Salesforce, now that they're cranking out net income and cranking out free cash flow, they're paying off their debt. And check this out. They spent $4 billion just in the most recent quarter buying back their own stock. So here's Salesforce, a very shareholder-friendly company now. Actually, look at this. Here's why a lot of people hated Salesforce. If we go back to 2022, look at this. They were issuing shares. They were diluting you every quarter. And now, just in the most recent quarter, $4 billion. And they do about $1 billion every single quarter. So that's why they're a huge company, $250 billion market cap. And they even just started paying a dividend as well. So if we look at their dividend yield, it's really small, 0.5%. But still, I really like Salesforce. They're actually trading pretty cheap for their industry. I'll actually go ahead and show you their free cash flow yield. So Salesforce actually has a really good free cash flow yield, even after this kind of run up right here. Look at this. They have a free cash flow yield of 4%. So that's what's up. And you have a buyback yield of 1%. Or even more. They spent $4 billion in the most recent quarter. They even bought back more stock. But yeah, this company's buying back their own stock. They have a very healthy dividend payout ratio. I mean, their dividend payout ratio is super low. It says 27%, but it's even lower than that, especially with how their EPS is expected to grow. So let's actually look at the forecast right here. I don't want to go too crazy with this, but look, in 2028 or 2026 right here. Yeah, so this goes to 2026. On the high side, they're expected to make $15. So yeah, that was Salesforce, biggest market share in CRM. And we got 8 shares of them. I really like Salesforce. But yeah, now let's look at Google stock. So this one right here, I really love Google. We're on YouTube right now. They own YouTube. But I'll be quick about this. Here's why Google's financials are so good. And looks like they're not going to get broken up. That's kind of, I think, what's being priced in today. They're up 4%. So I think there's no longer a risk of Google being broken up. But anyway, here's what's crazy about Google. They just made a record amount of net income, $26 billion of net income just in the most recent quarter, up 33%. So what is Google doing with $26 billion? Well, first off, they just started paying a dividend, which is awesome. And that dividend only cost $2.46 billion. So think about that payout ratio just for this quarter. They have a super low payout ratio. So what is Google doing with the rest of their money? Well, they're actually spending $15 billion every single quarter. Look at the consistency, buying back their own stock. So Google is a stock buyback machine, a very shareholder-friendly company. They also have tons of cash on hand. Look at this. So if we look at their long-term debt, they have $12 billion of long-term debt, which is actually like the lowest it's like ever been. Well, I guess since 2020, but yeah, it just went down 10% year over year. So lowest amount of debt. And look at the interest that they're making. So they made $3 billion of interest in the most recent quarter. That's because, guess how much they have in short-term investments? They have $73 billion of short-term investments. So remember this number, $73 billion plus the cash on hand of $20 billion. So Google is basically chilling with $100 billion even after the dividends and the stock buybacks that they do. So that's why Google's kind of a no-brainer. Might hold that one for the long term and don't really worry about it. So that's Google. Really love them. Won't be selling them anytime soon. And I was really happy with their most recent shareholder earnings report. They're growing in their Waymo business as well and their Google Cloud. Anyway, now let's get to my highest dividend paying stock. So this is Realty Income, and I actually think they're at a pretty good buying opportunity. Look at this, they're down 8% the past month. They actually just reported earnings, and if you want to see an earnings breakdown, my literal previous video right before this was me breaking down their earnings, which I thought were really good. So yeah, check this out. We actually get a dividend every month from them. If you buy 30 shares, you will also get $7.91 every single month. So Realty Income, they're in the S&P 500. They're a REIT, so they actually have to pay out most of their dividends or most of their income in the form of dividends by law. And they have a huge market cap. They're AAA rated from S&P Global. They have a $49 billion market cap. So they're growing their market cap. Look at their, first off, total sales growth. So because they're doing so many acquisitions, look at that. Their sales are growing like crazy. And this down here is the number we actually want to look at. So for REITs, you don't look at net income because they would have a super high payout ratio. You want to look at the net income plus the depreciation and the amortization. And that's this number down here. And in the most recent quarter, they made $841 million. And if we look at how much their dividend cost, remember, they have to pay out most of their income in the form of dividends by law. So it's actually normal for them to have this pretty high payout ratio, but it only cost $689 million in the most recent quarter. So if you ask me, that's a pretty fair payout ratio. They even have some room to raise their dividend. So yeah, that's why I like this one, monthly income. And I don't have a ton of exposure to it. It's only 10% of my Robinhood portfolio, but hey, I like the monthly income with them. And next up is Meta. So this one right here also just reported earnings and actually fell after earnings, which is kind of weird because they had the most impressive earnings report. We'll actually look at their numbers real quick. Record net income, record EPS. So look at Meta stock right here. They actually, as well, just like Salesforce and Google, just started paying a dividend. But check this out. If we actually look at Google, or this is Meta. If we look at Meta's net income, look at that. It's a record up 35% year over year to $15 billion. So if we look at their dividend or EPS as well, their EPS was $6 in the most recent quarter, and their dividend only cost 50 cents. So you can kind of imagine the payout ratio. They do $6 of EPS, and their dividend's only 50 cents. But anyway, let's look at this number right here. They made $15.7 billion of net income. Let's see how much their dividend cost. Remember, this is a dividend growth stock right here. Literally, the dividend cost $1.3 billion, literally nothing, especially if they make basically $16 billion just in one quarter. So what is Meta doing with the rest of their money? They also have an insane stock buyback program. Look at this. They spent $8 billion in the most recent quarter, $6 billion the quarter before that, and $15 billion that one quarter. So yeah, Meta is crazy with their stock buyback program. And check this out. They make so much interest. They make more interest than some companies are entirely worth. Look at this interest. Look, they make over $1 billion a year just in pure interest because they have so much cash on hand. So they have $37 billion of cash on hand, which is up 18% year over year. Look at that. $37 billion of cash and short-term investments of $27 billion, another $27 billion. So Meta, of course, is just another super cash-rich company, that just makes money on their cash. They just put it into T-bills, and they just milk interest. So Meta's another buy and hold forever stock. I really love them. So next up, we got McDonald's. So this is my favorite restaurant stock right here. If we actually look at them kind of on the 1 month chart, y'all remember that E. coli outbreak? It sent them down $20 billion in market cap. This was that news right there. And then right here, they had another news spike, like another 90 people got infected or whatever. Anyway, I still love McDonald's. So we're up 19% on our McDonald's shares. If we just look at this company right here, we'll actually look at MCD right here. We'll be really quick with this one because this one's kind of boring, but this is a name more well known than the Pope. They buy back 2% of their company every year on top of the 2% dividend yield. Look at this. So right now they have a 2.41% dividend yield. That's a really good dividend yield. And right here, look at this. Their net income is down year over year, but it's a hard quarter to compare it to. They actually are keeping up their net income. This is great. So last year it was up 17% year over year, but look at that. $2.26 billion of net income in the most recent quarter, and McDonald's dividend only cost $1.2 billion. Remember, that dividend payout ratio might seem kind of high, but McDonald's is kind of a mini REIT, and REITs have high payout ratios, but McDonald's, a ton of their market cap is their real estate. They have the most valuable real estate. And on top of that, look, they spend $1 billion on their dividend. Look, they spend $900 million a quarter on share buybacks. Look at that. 912 million in the most recent quarter. So if you go to the total common shares outstanding, look at that. It just goes down slowly over time. So it's down 1.56% year over year. So that's great. McDonald's is buying back their own stock. They have a lot of money to do whatever they want with every quarter. They collect rent from all the, their tenants that, or their franchise model. They were the one to start it. So yeah, McDonald's is great. I love that company. And next up, we have Constellation Energy. So this company actually fell. Look at them on the past month chart. I'm so close to buying another share if they go any lower. So they're down 18% the past month, but we're still up 37% on them. And they just had some phenomenal earnings. So of course, they have their partnership with Microsoft, which is great. But I want to show you, so they just reported earnings 2 days ago. Here's what was so good about them. So if we just look at their net income right here, remember, this is a utility stock. They are in the nuclear industry. They have a bunch of nuclear facilities, biggest clean energy stock. But anyway, remember this number right here. Just in the most recent quarter, they made $1.2 billion. So what are they doing with that? Well, of course, they pay a dividend, but their dividend only cost $100 million. So remember, this company has a super low payout ratio because their dividend only cost $100 million a quarter. And because of that, they actually are buying back their own stock like crazy. And they actually do opportunistic share repurchases. So look in the most recent quarter, they actually didn't buy back any of their own stock. I'll show you why, because the stock went up like crazy. But look at that. The 2 quarters before that, they spent $500 million and another $500 million on that. So yeah, Constellation Energy does a lot of share buybacks. But look at this. This is why they didn't buy stock. So it was obviously before that. But look at this run up that they had. The stock went up from literally 200 way up here. So they might have been trading at what they think is an overvalued price, because if we just zoom out on them, look at that. They literally IPO'd just 3 years ago and have 5x'd since then. So they've gone up certainly a lot in a short amount of time. So yeah, that one right there, that one's a buy. And remember, none of this video is financial advice. This is all just my opinion. I'm just sharing with you what I own in here. But yeah, and then we'll look at UW. Actually, we won't even talk about this one. I actually just made a video about them a few videos ago. But let me show you my dividend history. So since we're wrapping up our Robinhood portfolio, now we're going to get into our MooMoo account. But here's all the dividends that I received. So yeah, there's my some of the Roth IRA ones. But yeah, we get a dividend every month from Realty Income. My Salesforce dividend, they're all super tiny. But since they all have super low payout ratios, imagine what this is going to be in 5 to 10 years. Remember, they're growing their dividend by double digits every year. So Carlisle, check this one out. Actually, I'll show you but the best example of that. So I have always had 10 shares of this company, and look at the dividend growth. They went from $6.80, $8.50, or I didn't have any shares in that quarter, but it went from $8.50 to $10, and I didn't own any more shares. I had the same amount of shares. They just organically raised their dividends. So I think in a couple years, my dividend income is just going to explode. So yeah, that's my Robinhood account worth $15,800. Now we have also my MooMoo account in here, which I can't wait to show you. If you want to download this app, by the way, check out the link in the description. I love MooMoo. If you look in the middle here, I actually have $428 of cash. You get 4.6% APY on that. It made me 5 cents of interest today, which is pretty cool. So yeah, and there's no hidden fees. On Robinhood, you have to pay $5 a month. But anyway, let me show you what stock, you can probably see at the top there, is going nuts today. So this is Powell Industries, and we bought this stock less than a year ago in January of this year. So if I did sell it, I'd be selling it at short-term capital gains. But here's kind of a lesson, I probably would have sold this stock for a double right here, but I thought the valuation was still cheap. So I just kept on holding it. And literally today, I don't believe it, it's up 18%, a new record all-time high. I literally don't believe it. We're up 340% basically in 9 months. So that's crazy. So I guess we'll be really quick about this one. So Powell Industries, actually, they're my second largest holding. They're pretty important. Let me tell you why this stock's going up so much. So first up, this company is completely debt-free. They have zero debt, so they don't owe anyone any money. And just look at the net income growth of the stock. It kind of makes sense. Look at that, $46 million just in the most recent quarter. They actually have a backlog of over $1 billion of orders that they can't fulfill yet. But remember, they made $50 million just in the most recent quarter. Their dividend only cost $3 million. So they have such a low dividend payout ratio. Literally, it costs $3 million. And on top of that, let's look at the cash they have on hand. So remember, we look at the short-term investments and the cash. So they have $42 million in short-term investments. So $42 million plus on top of that, they have $332 million of cash. So basically call it $400 million of cash. And remember, look, total debt is zero because they literally have zero debt. They don't owe anyone any money. But because of that, remember, they make a ton of interest because it's in their short-term investments. So their dividend only costs $3 million a quarter. Well, the interest they're making on their cash covers the dividend. They made $4.5 million of interest on their cash, which covers the cost of the dividend. So anyway, Powell Industries, I'm not shocked that they're at all-time highs. Now the valuation does seem a little high. I mean, if we look at the forward PE ratio, it's a 28.8. That's not crazy. But yeah, I certainly wouldn't be buying right now. This not, yeah, the risk to reward doesn't look great. It looks kind of overbought right now. Next up, we have Disney, and this one right here, I've been loading up, as you can see, exactly where I buy every share. I've been buying this one like every couple of days now because I think this one's going to have a great few next quarters because they're raising the prices on their premium subscribers. If we actually look at this right here, you see these premium subscriber data. They're raising the prices. This includes, Disney Plus, Hulu, ESPN, which they all own, or Disney owns all that. And they're actually raising the prices by a couple dollars every month. And, they report quarterly, but I can't wait to see what happens with that. If we just look at Disney's free cash flow down here, they make $9 billion of free cash flow a year. They're trading at 21, actually probably higher now, like 22 times free cash flow. But if you look at Q3, look at this. Or Q4 is the quarter where they make a ton of free cash flow. So I can't wait to see what happens this Q4, which they report earnings in on the 14th. So in about 10 days, they report earnings. So I'm very curious to see what will happen with Disney. And next up, we got Cubesmart, ticker symbol Cube. So this one right here, since they are a REIT, the REITs are following, just like Realty Income, they're following bonds right now. The bond market is kind of pricing in more inflation. So if we just look at TLT, if you want to see what moves REITs, it's this ETF right here, which is the US 20-year Treasury bond, which actually is a pretty good buy right now. You get the monthly income and the 4% dividend yield. And as rates go lower, you get the stock price appreciation of the bond. But anyway, because that's falling, it's sending Cubesmart down as well. So yeah, this one right here isn't doing great. And if we look at the dividend yield on this one, remember they have to pay out most of their income in the form of dividends by law, just like Realty Income, but they have a 4.37% dividend yield right now. So I actually really like them right now. We are up 14% in our shares, so I'm actually considering buying another share on them because we haven't been that little up on our shares in a long time. But I will show you guys a loser right here. So here's a stock that has not been doing great. We actually bought a share of Nike yesterday. I was hoping that they do good, but here they are down 3.5% today. So we got to be careful with Nike because they did just get a new CEO, which is good news, but still the financials and the future is not certain. So if we just look at Nike down here, we look at their net income, just look at this. It's down 27% year over year to just over $1 billion. So yeah, that's not great. Their net income was down. If we look at their top line revenue, their top line sales, it was also down 10.4% year over year. So that's not great. Actually, here was some good parts. So if we look at their revenue by breakdown, look at their equipment business right here. If we actually look at this, there's some phenomenal growth or some pretty good growth here. It's up 13% year over year, their Nike equipment business. But if we look at their apparel or mainly their footwear business, their shoes, look at the decline of their shoes. It's down basically 12% year over year. So not great. But here's the one good part about Nike. Look, they're keeping up their margins. So despite Nike falling, their sales falling, they're keeping up their margins. So look at this. Gross margin is up 3% year over year. It's in the top right there. The top right is the most recent quarter. Their operating margins up 4%. Look at their net margins. Their net margin is higher than it was last year, despite the sales declining. So they're keeping up their margins, which is really good. And 16% tax rate. Anyway, that's what I wanted to show you. They're keeping up their margins. Hopefully, in the lower interest rate environment, that'll help out Nike. I mean, they let a lot of competition take them over. But yeah, that's Nike. Might consider more shares in them, but do understand the risks. So now let's look at EOG Resources. This is my play in the oil industry, and the oil stocks did really good today. They were up, or this stock is up 4.2% today, and I'll actually show you the numbers on this one because EOG has some impressive numbers. So this is why I actually want to build a bigger position into EOG, but it's in the oil and gas commodity industry. Anyway, they make, actually, if you average it out, 1.8 billion every quarter of net income. So let's just look at the most recent quarter. They made $1.7 billion of net income. And check this out. Their dividend only cost $520 million. Look at that. It actually went down from the previous quarter, 525. Why does it say 1.3 billion right there? That's actually because this company does frequent special dividends. So if we look at this company's dividend history, look at that. $1.50 special dividend, $1, $1.50. They actually do frequent special dividends, but they actually I was listening to their earnings call. They just did a switch. So they're no longer doing special dividends. Now, if we go back here to their stock buyback program, look at this. They just stepped up their stock buybacks like crazy. 700 million in the most recent quarters, 750 million the quarter before that. And let me show you how much cash they have even after that. So even after that, they have $5.4 billion of cash on hand even after that. So that's what's crazy. If we look at their total debt, they have more cash than debt right now. So only $3.78 billion of debt. Yeah, here's their diluted normalized EPS. Look, they mainly just follows whatever oil prices does, but they're a really profitable company. And if we go to their PE ratio, remember, they have a really low PE ratio because they're in the oil and gas commodity industry, but they're trading at, basically 10 times PE ratio with a near 3% dividend yield, 2.86% yield. And if you include the special dividends, if you average it out, they probably have a higher yield. But yeah. Oh my goodness. So here's the next stock right here. This was the first stock I believe I ever bought in this account. We started this portfolio a year ago and literally at the October dip. But anyway, this stock is the highest it's ever been since we've bought it. Check this out. It says $75 right now. So DocuSign is a completely debt-free company. They have zero debt. And I pretty much like them. They're kind of boring. Look at their free cash flow right here. Look at the 4 most recent quarters. If you add this up, you basically get $1 billion, just under $1 billion. But just to make math simple, let's round it up to $1 billion because they'll probably grow it over time. Let's find their market cap. So look in the top right, their market cap is $15 billion. So you can probably do the math on that. They're basically trading at 15 times free cash flow. So that's what's really cool about DocuSign. They're debt-free. So if you do it, and they have a bunch of cash as well. So you know what, we'll look at DocuSign real quick. So I'll show you how much cash they have on hand. Hey, thanks for watching this far in the video. If you're liking this, if you like how I show you all the numbers, then make sure you drop a like on the video. So they actually just bought a business. There was an acquisition. So it says they made $800 million in the most recent quarter. That's not actually true. We want to go and look at their operating income. So this is the actual number they made. So look, if we look at their net income, look at it. If you remove that most recent quarter, they used to, lose money every quarter. Now they're finally profitable. We're looking at operating income to exclude that, one-time huge bonus because of an acquisition. But anyway, let me show you how much cash they have on hand. So first off, they have $319 million in short-term investments, plus another $620 million of cash. So, close to $1 billion. But why is it down 39% year over year? Well, check this out. They're actually spending their cash right now buying back their own stock. So here's another company that's buying back their own stock. Since they don't have to pay a dividend, they're able to afford stock buyback. So that's what's really cool about DocuSign. And look, because they have a lot of cash and zero debt, look at the interest that they're making. $14 million of interest in the most recent quarter. And where was their debt? Yeah, so look, debt of zero. They actually just paid off all their debt. They used to have $700 million of debt. Then they just paid it off about 3 quarters ago. So that's what's cool about DocuSign. And finally, we got 2 more stocks right here. So Bill Holdings, they're up $54 today. They actually they're up 9% today. So yeah, the whole financial industry did crazy today. All the bank stocks, congrats if you're in any of the bank stocks, they went crazy. But yeah, we actually haven't bought this one in a while. It still is a little risky, so I can't really buy more of them right now. But they do crank out free cash flow. Look at that, $73 million in the most recent quarter. If we look at their net income, next year they're about to be completely net income positive. So we got 2 more quarters to see for a full year. But I think Bill Holdings is gonna make it out. Since they have so much cash on hand, they're making a ton of interest. But still, I don't love their valuation. Their valuation does seem a little high. There's a lot of growth priced in. So that's why I just haven't done anything with that position. But here we go right here. So this is our final holding in here, our actual biggest loser. Look, we're down over $1,000 on the stock. And so here's why I recommend you dollar cost average into stocks, but make sure you dollar cost average into high quality companies, into high quality names, or else you'll have this stock right here down over $1,000. But yeah, they actually just reported earnings today, which is kind of funny. Look at this. Look at that. They fell into the close. I didn't know that. They actually had some decent earnings. They were expected to lose money, but they actually ended up making a profit. So I'll actually be really quick with this one because I have slowly been buying more of this one. I don't know what'll happen with them, but this company is actually completely debt-free. So remember the market cap in the top right? Look, it's $430 million. So remember, Perion Network is $430 million market cap. They have zero debt, so they're debt-free. And if we look at their short-term investments, look at that. $260 million in short-term investments. So that's already over half their market cap in short-term investments. And where's their cash? Yeah, here's their debt. Look, they actually have zero debt. And where's their cash? Another $145 million of cash. So almost 100% of their market cap is just cash. So yeah, that was Perion Network. Our biggest loser. Why did they go down so much despite the good financials? They actually lost a contract with Microsoft. You know, the basically biggest company in the entire world. Actually, I think that's Nvidia right now. Can y'all believe that? If we search by market cap right here of, you know, the top companies, I think, I'm pretty sure. Okay, I guess this app does not want to load. That is very weird. But oh, maybe. Now, anyway, well, I appreciate y'all being here. Don't forget to drop a like on the video. Hope you appreciate the stock portfolio update. There we go. Gee, so yeah, look at that. NVIDIA is the largest company in the entire world, $3.57 trillion. So that was all I wanted to share with you. If you have any questions, don't forget to drop it in the comments. I will happily answer all of them. And if you want to download this MooMoo app, which you get the 4.6% APY, make sure you check out my link in the description. It's an affiliate link, so and if you use it, we both get some free stocks. So you'll get some free stocks and I will as well. And if you want, you can become a YouTube member. I'd really appreciate it. And it's better than this Robinhood app because if you get a 4.5% yield, but you have to pay $5 a month. So yeah. Thank you all for watching. My name is Nathan Robert. See y'all in the next video.